Ensimmäisenä meille tulee tänne puhumaan nainen, joka itse asiassa pitää keynotensa englanniksi. So the next keynote is in English. Welcome to the stage, Director of Data Analytics, Reporting and Transparency of European Banking Authority. Meri Rimmanen, welcome to the stage. Se on pitkä.
Kiitos tosi paljon ja ensimmäiseksi ihan kiitos kutsusta. Olen täällä erittäin mielelläni. Täytyy laittaa silmälasit, että mä näen noin mun slaidit. Okay, so let's switch to English and then I'm happy to reply any questions also in Finnish. So I think I'm here because DPM is connecting people. In this case, literally, it was the EBA data point model that brought me here. So I'm very happy to talk about our simplification work and what we are thinking of in general regulation, but also in more specifically than on data and on reporting. I was also super happy to hear today positive commentary of BCBS 239, which we also love, and that data is the most important thing of everything, which I also share the passion about data. This is what we need for all our operations. So I'll start with a few things on the general simplification and efficiency agenda, and then let's dig in a little bit to reporting, and then I'm happy to discuss and have any questions. So we have launched a structured program to streamline regulatory and supervisory rules and processes at the EBA. The idea is really to make things more efficient. So our main goal is not competitiveness as such, although we want to support competitiveness, but the main goal for us remains financial stability, not forgetting consumers either. We have 4 different topics or clusters of actions for the simplification agenda, which is regulation itself, then of course reporting as a main building block, and holistic picture, which is more, we heard in the panel also that sometimes is a challenge when we have lots of authorities and they don't coordinate. So some of the actions are in relation to that, as well internal organization, which for you is probably not very visible directly, but behind the scenes we are trying to change the culture of how we do regulation since we are a regulatory agency. So aim, reduce complexity, ensure proportionality, and improve how we bring regulation and supervision to you as supervised entities or reporting preparers. You can find more on the website. There is also a tracker if you want to see the individual actions and when they come out, so I recommend that. So, few selected topics outside of reporting. We'll come back to reporting in a bit. Credit risk remains a focus area. It's the biggest risk for almost all of the banks. We issued simplification, in simplification manner, the new technical standard on material model changes, so that supervisors wouldn't need to scrutinize each and every little change, but streamline the actual process to focus on material changes. We just closed the discussion paper on credit risk. Initial feedback there is that the change is a cost, and often a big cost. So the appetite for doing changes is not so straightforward that we actually want to have lots of changes or simplification. They also come with a cost, so we'll have to see what comes out from this discussion paper. I hope you've provided your input into this, since all of this is welcome and open for everyone to use. A second topic that we are discussing currently, where we've not issued anything yet, we will do later this year, is the use of the so-called SNCI concept, which is small and non-complex institutions. Here we are considering changing the definition, so expanding what considers a small and non-complex institution. So if your balance sheet is somewhere between, let's say, between 5 and 10 billion, I think it's worth to pay attention and participate into the discussions. This could be a very big change for you, potentially. So we talk about the definition, but also we talk about how we could use the regulation and how it should be more proportionate. So we have simplified NSFR, for example. Should we offer some other types of simplifications on other risk areas, for example? So we will launch some discussion on these kind of things, or even do a small bank regime. We still want to have a single market, which is very important, but everything is open for discussion. And then the third point that I wanted to make is the coordination among authorities. So we want to establish more collaboration between prudential authorities, with macroprudential authorities, with conduct authorities. We also have an AMLA as new player. And while we all do regulation and rules and supervision we have very good justification why we are doing this regulation, but we don't have always the full picture of how it impacts banks. And this, I think, we heard also in the panel, since one of the topics where we are going to issue more like some options for discussion this summer is capital stack and stacking order and the variety of buffers we have for macro buffers, micro buffers. We have going concern, gone concern, and this is a real issue, and we have also identified that this is a real issue. But there are no easy solutions either, so it is not an easy discussion to do a simple capital stack with buffers, requirements, with guidance, with how is the buffer usability, etc. But we are doing our best with all the authorities, and we'll come up with something this summer. Other example is stress testing. So those of you who are subject to the EBA or the ECB stress testing, we are making some real efforts on trying to streamline the process, both for you, but also for the authorities side by doing a kind of a hybrid, so going from bottom up to a bit of top down versus plus some bottom up elements. And also part of that, we are standardizing the data collection. So the starting points will be part of supervisory reporting, so you can standardize, and it's not such a burden to start. Of course, then for the exercise itself, we need to collect some more data, but at least the starting points would be streamlined and standardized. So in many ways, it's business as usual at the EBA side, but also adjusting our approach. We are almost now nearing the completion of the banking package, and we will deliver, I think, almost all of them during this year. But at the same time, what we are asking ourselves and where we are really trying to do a cultural change is to assess the objective of what we want the actually regulatory supervisory outcome to be, and then assess what is the right way of delivering on the mandate. Is it a technical standard? Is it a guideline? Is it something else? How do we balance ex-ante regulation versus ex-post supervision? And where is the balance of getting the right outcome and also lowering the burden of everyone? It's not necessarily going one versus completely the other one, since then if everything is in supervision, then we may have the issue that we heard previously, that the supervisors have lots of powers and then not everything is necessarily completely comparable, which may not be the right way either. But we are assessing the balance between regulation and supervision, and maybe try to go a bit more towards supervision rather than regulating absolutely everything from the beginning. We also heard that someone mentioned the competitiveness report that the Commission is going to issue this July, I believe. In the meantime, we are going to continue working on the current mandates and the current work that we have, but also reviewing of how do we do things to find better ways of achieving the objectives that we want to achieve and reducing the burden for your compliance. After the competitiveness report, I think in the One Europe, One Market plan, the Commission is going to issue legislative proposals. Then we'll see what will be the change coming. But in the consultation that they just closed, it was quite open for what changes we are looking for. Then let's move to reporting, and the reporting topic. We want to aim for efficient reporting, which is simpler, smarter, and proportionate. I think we heard already from Mika these slides, so I confirm that this is the objective. We have one long-term target, which is integrated reporting. I'll finish with that. In the short term, the objectives and the sort of actions we take are related to coordination of reporting requests, change management, which are the two things that we've heard that are the biggest cost drivers. On top of that, we are doing cleaning exercise of our own reporting and also of the national supervisors' reporting. So what we want to aim for is harmonization and integration of reporting, so clean that we have these overlaps and multitude of requirements and requests, gold plating of existing reporting by national competent authorities, and then also making it more standardized so that we can build tools and put things out in a way that help you to implement and build your own tools. Also in terms of content, we want to streamline it to be necessary for supervision, but designed in a way that it would help you in your risk management and your internal reporting, so that we would reduce the burden that you need to develop and implement and prepare something only because you have to send it to the supervisors. So the aim is really that you can use the same work that you do for your own internal needs as well, since we all need data. So then let's move to reduction of reporting requirements. So we are refitting our own EBA supervisory reporting. It's not a new thing. We've done this already 5 years ago once, but we wanted to complete now the remaining parts and have another look on things. Some of the things that we've done is we have harmonized, for example, liquidity reporting, where we had lots of national requests, because it was the original liquidity reporting was very much driven to assess whether you comply or not, but it was not really fit for actual supervision, and we also heard lots of comments that it's not really usable for your internal needs. So we've revamped it quite a lot. We've also cleaned definitions and these kind of things. We've added some proportionality for the smaller banks. Then we have new reporting, which are IFRS 18, that starts in the beginning of next year. Fundamental review of the trading book is still being up and coming, but we need to always keep the reporting aligned with the latest development of FRTB as well. And then we have operational risks, where we have new taxonomy that you also need to implement for your prudential calculations and your risk management. And there, for example, we've done reporting which is granular, which is unusual for us, since we believe it's better design and it's more useful for you if you do granular reporting, since you can directly use it yourself. But your feedback on this would be very welcome. The consultation is open until 10th of July. And then we have ESG reporting, where we had disclosures, Pillar 3 disclosures, but not reporting, so we implement the same. On the chart, we came out with the big number of that we are reducing 50% of reporting. This is relevant for those of you who need to do stress testing exercises, the European ones. We are integrating the whole stress test dataset into reporting the starting points, and at the same time, we reduce a lot on how much we ask data. For FINREP Corep, it's a bit more modest impact, so I think there we have minus 60%. But we did cleaning anyhow, and with supervisory benchmarking as well. So overall, we are doing reduction and a cleaning exercise, and this is at the EBA side. But what we realized, what we've heard from you and from banks lots of times, is that there is a lack of coordination, there is lots of requests that come across as very similar and overlapping, but we did not really know how much was this. So we did a stock take that we also published. And in the end, indeed, there is a lot. Finnish FSA or the RVV is not the worst. I think they are not gold plating that much. There is only a handful of extra requests. But then we have the SSM, and then we have many other national supervisors. So altogether, last year there was 671 reporting requests, either ad hoc or regular, with almost 1 million defined data points, while Corep FINREP is something like 92,000, 95,000. So it is a lot of extra reporting. So we did all commit in our community that we have to streamline this. We'll have to let go something. And for example, liquidity is the second most popular topic with 100 requests on top of the LCR, NSFR, ALM that we already have. So the idea was that we'll cut this bar, hopefully, to very low by reshuffling the harmonized reporting. And then hopefully we aim that this would reduce the costs. So the supervisors have agreed 18% cost reduction by just removing some of these data collections. So this was the holistic approach, that we should not just cut the European reporting, since it's harmonized, it's pretty standard. And feedback was that also it's not the most burdensome. It's more the extra things that come on top of this on an ongoing basis. So then we had evidence that we have a coordination issue. So what do? We aim for better data sharing and more data sharing, and on this we've already taken quite a bit of actions, that we have obligations to ourselves that we do not ask if someone else already has it. And we do this quite a lot with the European Systemic Risk Board, for example, will have access to all our bank data. We are doing with other ESAs, we try to facilitate between the national supervisors for them to share data, so that we would not need to do this, that we ask because we don't have it, even if someone else has it. So there are more strong obligations for us as authorities to improve this, that we reuse data. The other things that we are doing on this is that we are writing a guideline to ourselves, the supervisors, where we are going to formalize the best practices of how you ask for data, that you reuse definitions, you always check what is already existing, and you do like a vetting process before you just go out and ask. So you should not get any more calls that, okay, now, by the way, I need this and this and this, and can you send it? And we have then an obligation for everyone to register their requests into a public repository of data requests. So this is where you can keep an eye on that your supervisors are doing what they are promising to do and not ask you anything extra. So this repository will launch end of this year or beginning of next year. It's not data, it's only the data requests. But if your concern is that there is too many requests, you can use this as a tool to hit a bit back to us or your supervisors. Now, I'm going to mention you that Pillar 3 Data Hub that we have on our website is something where you have all data. So you have all large banks' Pillar 3 reports, and soon you will have also bulk downloading. It's a bit of a transition phase, but go and have a look. If you use bank data or you need peer data, the full Pillar 3 is there from the large banks. And we are developing also tools for you, for all audience to use it. So no more downloading the Pillar 3 reports and try to make them comparable. You should have them there, everything in one go. So hopefully this will be helpful for you as well. Then moving on, the other big thing that we have heard that is a cost driver is change management and the frequent change. And this, I think, is in particular an issue on the supervisory side. We do change quite often. And now that the EBA framework, for example, is already quite large, it's not only FinRep Corep, you have resolution, you have payments, you have investment firms, Mika, Dora, lots of different things. And somewhere comes the change trigger. So there is a feeling that something is changing all the time. And we are trying to tackle this. We are also asking feedback from the audience and from the public on this. So I welcome all of you to reply to the consultation of how can we improve. So we have identified that we should improve communication, that you know what is coming, even if we are not always fully sure of what is exactly the timeline, but you have an idea of what's coming. And the other one is how to improve predictability and stability. So far we try to bundle things so that we don't do on an ongoing basis, but we do have the big challenge, which is that the regulation changes, and then we need to change reporting. And for that, we have not found the magic formula, how we keep stability when the regulation keeps changing. Now with the competitiveness report, even before we fully complete the banking package, we may already start a new change process in the regulation. So how do we manage that? If you have ideas, please send them to us. Then finally, what we try to do is to offer tools and put out our reporting requirements in a way that you could automatize things, it could help in your implementation. And of course, for us, the most important thing is the Data Point Model 2.0 standard that we internally use for everything. We could not manage ourselves with the changes in reporting unless we built the whole data and reporting chain based on the DPM metadata. This is how we manage the versions. Otherwise, we don't know how you do it if you don't use this, but I hope you do. So this is something that we have developed with EIOPA. So for insurance sector, you should have the same tools. But also now, we are very closely working with the ECB. So once the IREF and the statistical reporting comes, we are already discussing how we integrate things into a common data dictionary together. So this will be more and more important. Another thing that we are currently working is DPM Studio, which is a tool how we generate the DPM and XBRL taxonomies. And we are going to, this currently helps us to provide you a bit earlier the technical package. We know that this is an important thing, that it comes as early as possible so that we leave you lead time to implement. But we're also going to improve this, and the aim is to make this publicly available. While you may not need to generate new frameworks, this could still provide you tools to how you take benefit from the DPM and provide other solutions or integrate things into your own systems. Then, okay, XBRL CSV, we streamlined and made taxonomy and the files a bit leaner, so hopefully that's helping as well. And then this year we start, which is a commission-led project of Digital Europe program, which is a huge, there are billions and billions of money of this, but little bit is also for Common Data Dictionary, where we will also work together with the contractor to provide more tools and help in the processes of how we can support implementation of the reporting requirements, etc. So you will hear about this during this year. All of these short-term actions lead us to the long-term vision, which is integrated reporting, shared by the EBA and the ECB and all the supervisory, resolution and statistical authorities in the banking sector. The main goal of ours, or the principle and the mission, is define once, report once. So we all put our requirements together, integrate them, and then we ask for one huge data set. So volume may be higher, but hopefully it will be simpler reporting. And then we share, and this is the aim. Whether we have one infrastructure or no, several different infrastructures, the aim is really that we reuse and we do not ask twice. And we take this quite seriously, so all of the authorities are working on this. The other part of this is coordination and collaboration. So we are all committed that we do want to work together so that we have this holistic reporting requirements, so you would not have all kinds of extra things on top. In the joint bank reporting committees, that brings, we are almost 100 authorities, European and national authorities, but we also have a group of banks and reporting preparers. And we have a dialogue and very close contact how we are working currently. And this really, the aim is that we do this together. We start with the European, we integrate the European requirements, but the idea is that all national, everything else will come this, and we all use the same data dictionary and reporting framework. This is a long-term thing. Our former chairman said more that this is like an inspiration, that is like a lifelong project, but we are also making concrete progress with this. We want to harmonize things and standardize things. This is necessary for us to use technology, all of us. You can maybe use AI for all kinds of things, but I think your AI benefits and your AI use will be a lot easier if we do standardize the data. You have the definitions, master data, everything else in an organized manner. I think it helps you to get started with your analytics. We also want to design things efficiently, and this is where we are asking the reporting contact group and in the consultation now from you, how do you see things? Is this the best way to build a template, for example? We want to move away from the template-based design, but it's a cultural thing as well on the supervisory side, but we are sort of taking the steps, so I think your feedback would be welcome of, does it matter that we do a complicated template where we count the data points, or would you prefer that it's a bit bigger, but simpler way of asking things. This year we focus on semantic integration to complete what we call common glossary. We already have issued ESG recommendations that the EBA has implemented now with the consultation and with the pillar 3. We will have FinRep IREF, basically the whole dataset, SRB valuation dataset will also be reviewed against the EBA and ECB reporting. So we are trying to do this cleaning of definition, also hopefully helping you. We think that this can be potentially a major benefit for everyone. That you don't need to do this work yourself. Maybe if you then use internally other definitions, you may need to do mapping and other things, but we really try to clean things that you wouldn't need to think anymore whether something is the same, maybe it's not the same. Is it similar? Why is it similar? Is it justified that it's similar but not the same? So this work we try to do for you, and we hope that it will be beneficial for you. And this year we try to complete quite a lot of the existing reporting and the coming IREF regulation. All of this we work together with the ECB, but also with all the national authorities in resolution and central banks as well. And we are starting preparatory work for the Common Data Dictionary, where our starting point is the DPN 2.0 standard. So this is the long-term vision that we remain fully committed on the EBA side, ECB side, and we want to bring things together and make efficient. And then maybe finally to conclude, what do we aim here? The thing is that we all need high-quality data for all of our work. So I think we need it, we should not let it go, but we need to make it efficient. Both efficient and sort of as low cost as possible to produce, but also really increase and maximize the benefits that we can all get it from it. Not just the regulators, but also for you, for your internal use. So this is the aim, and for that, we are trying to reach out and get feedback and discussion as well. And this is why I'm particularly happy to be in the Nordic, in Helsinki and in the Nordic countries, since we don't get that much feedback from the north. So main ideas that what we want to improve and aim here is the coordination, cooperation, collaboration. We can do this together much better than we are a small team at the EBA. We can do lots of reporting requirements, but we don't know how it impacts you and how we could actually make them better. So we need standardized data so that we can reuse, share, and use it for your purposes, for our purposes. We should integrate so that we remove all these overlapping things. And then, of course, we want to provide them out in a tech-friendly way that makes it easier for you to implement. So I would stop here, and I'm very happy to answer any questions you may have. Finally, a couple of promotional points. Next week we have a simplification seminar, which is open for public. So if you want to join online to listen when we tell you a bit more about some of these projects, you are very welcome to join. And consultation feedback is open until 10th of July. So hopefully, even if you do little parts, submit your feedback. It's very, very warmly welcomed. So I'll stop here. Thank you very much.